private equity in India has come of age over the last few years. Every year, nearly 40 to 50 billion worth of PE trades happen, which is almost half of the gross FDI received annually by the country. Key trends or the factors leading to interest in private equity in India are, number one, it's big-scaled economy, GDP in excess of $3 trillion. Number two, vibrant public markets where we have recently hit the 5 trillion market cap mark. More importantly, stable macros including reforms, public policy, and the sheer confidence that both domestic and global investors have shown in India's regulatory watchdogs, including RBI, SEBI, IRDA, etc. On top of that, we have a very entrepreneurial market with innovation happening all the time, be it UPI, quick commerce. So you have this, both sides, the capital formation side as well as the new business formation side, both engines working in tandem in parallel. Specifically in regard to private equity, in the last 2-3 years, we've seen a big shift. Back in the 2020-21 days during COVID, we saw valuations rising to stratospheric levels, really, I would say, off the charts. But over the last 1.5 years, we've seen that the valuations become a lot more reasonable. Founders have recalibrated their strategy from pure growth to profit. And every founder that we are meeting is, working on their unit economics. And this, in our view, is probably one of the best times to invest, where we are getting a better company at a cheaper valuation, plain and simple. So look, India is poised to become the third largest consumer market globally in the next 2 or 3 years. Domestic consumption drives 2/3 of the GDP of this nation. And as a nation, we crossed that per capita GDP mark of $2,000 in 2019, which is supposed to be that tip-off point when the spending on discretionary item accelerates. So this premiumization is one of the key trends that we are seeing in the market as, incomes rise, aspirations rise. Underpinning this consumption is financing. India is a vastly underserved market where private debt to GDP at 55% is 1/3 of the global average. Significant gaps exist in both retail lending, wholesale lending in our view. And yet credit is the backbone for economic growth and is a huge multiplier effect on the GDP, nearly 1.5x. So we find that these two themes, along with the right regulatory support, will drive demand in other sub-themes like manufacturing, like green and sustainable. The other theme that we believe will do very well is IT, whether it's data, cloud, or even traditional IT, where India continues to deliver as the service capital of the world. This also includes the new age economy where disruption is happening all around us. So we are investing in 2 stages. Series B and C is one bucket, and the other bucket is the late stage. We've clearly identified value creation strategies for each. In the Series B and C, we work closely with the owners on the business side, whether it's assistance in identification of new market segments, business development, or even hiring in the right places. For late-stage companies, we help in relevant market introduction, given InCred's wide client base throughout India and overseas, as well as on the capital market side, given our group capabilities on, in areas like institutional equities, ECM, etc. In addition, specifically for companies in the financial services space, given our strong position in this sector, we also bring on board a lot of the industry knowledge. We believe private equity should be a core part of the portfolio. This asset class is meant to generate high returns over the public markets. So for the investors who have the risk appetite and are looking for that alpha, in our view, this asset class is that right fit. almost 100% equity, very little fixed deposits. I also don't own any heavy assets like real estate. I love reading biographies, especially those on business owners. So in the last 1 year, I would have read maybe 4 or 5 such stories, including Zomato, Zoho, Indigo, Bujia Barons. And I'm currently reading through The Making of Hero, which is written beautifully by Sunil Kantmanjal. Or if I were not a fund manager, I would be running a personal relations agency. I love meeting people, definitely.